Good afternoon. Good afternoon. Good to see everybody. You should see the screen. You should hear my voice. And good morning to you, Sandy, on the other side of the world. You should see my screen. You should hear my voice as we prepare for our weekly market wrap. We're going to give it just a minute or two. 6:15 a.m. Okay, that's not terrible. That's an early morning. 6:15 a.m. on Saturday, right? Okay. Make sure everybody's audio is connected. We're always a straggler or two gets stuck in the waiting room. Well, it turned out to be a positive week here, as we were expecting a positive week here. There are signals that showed up. Okay, so I have to get a better sense. I'm trying to get a sense of the alerts, and I was looking to get the first one out today, and there was a problem with the formatting that I tried to create a template for it. And anyways, I was also trading it. I'm not going to tell you which one it was, but it did work out. Lesson learned. There are signals ready for Monday, so okay. Anyways, it's a work in progress to make sure that it's pretty strong from the very beginning. Hi, Bob. Good to see you. Hi, Perry. Okay, officially welcome out to the Market Watch Group weekly market wrap. I am Scott. I will be your host. Here are the disclaimers. Always remember that this is for educational and illustrative purposes only. We are not investment advisors. We do not provide guidance or recommendations. Alerts, not guidance or recommendation. They're alerts. They're like, hey, look at this. And if I were to explore this as a trade, here's the zone I would use for a stop. Here's the zone I would use for a target. Here's how long I would think. Here's where my first target might be. That's what the alert service is looking to put out. Maybe even a couple of like brief explorations of how would I turn this into a trade with an option. Okay, so those are the disclaimers, as always. Here's the agenda. Today's market analysis, what happened today relative to this week? How are we processing this week relative to our market posture? As we revisit the posture, how did we do for the week? Right? What we always want to, like we do on Sundays, we always talk about in Monday mornings, what are we looking for based on our posture? What's changed? What's happening? That's a combination of market posture and trading posture. And at the end of the week, we want to say, okay, here's what we thought. Here's a couple of things we were looking for. Did we get them? You know what? That's a great idea. I'm going to put as part of, some kind of a premise, objectives and perspectives on the market. I don't know, something where we have a Sunday summary so that when we get to Friday, we can say, here's what we thought would happen. Here's what happened. How did we do? I mean, it's a little anecdotal now. I mean, I feel like we said we're looking for bullish trades, expect bullish flags to break, et cetera, et cetera. Okay. Close 3 for profit today. Got stopped on one loser. Good day overall. Nice. Glad to hear it. We'll look at the posture, revisit our thoughts on how we did and what we're thinking might change going forward. We'll talk about mindset for trades being carried over. There's a good chance you put on a trade today. There's some things that are moving with these earnings coming out positive yesterday. It triggered some signals for sure. We'll talk about that. So do you have trades? Are you carrying them through the weekend? Market's looking pretty strong. So yes, I would say. What to look for next week? What information's coming out? We just got the Fed. We're really starting to dial back those expectations. We'll take a look at that and see what I mean. The least amount of expectations we've seen yet. We'll talk about any economic news coming out, what might have the chance to act as a catalyst, whether it's a motivator or a disruptor. We'll take a look at our our watch list to see if there's still setups. In my opinion, there are, and we'll look at where they are. And we'll talk about trading plan progress. We are wrapping up our work on your routines. You hopefully have given me my hour already in your trading plan work. We had a great session yesterday and this week talking about systems, strategies, and rules in the foundations class. If you missed it, check your email, go to the content library and watch it. It's, I think, useful and pertinent to what we're talking about with the trading plan. So yeah, we're 5 of 8 sections done. The first iteration of 2024 might be the first pass for some of you, might be the third, maybe even the fourth for some of you. Those on pass 3 and 4, you should be really starting to enjoy and like your trading plan. Okay, let's hit it. Let's get into it. Starting with, let me make sure I still can see this. There we go. Trading last night was fantastic. Press, thank you, sir. I much appreciate that. Again, we had great participation, great questions, super helpful to any presentation. So thank you guys for that. Okay, so today's analysis, what's going on? Very bullish. Started flat, right? Started flat because we're still in that, oh, is bad good? What do you mean bad good? Well, we had a lot of good earnings. That's just good, right? The more, not all of them. Apple responded unfavorably, but recovered, I believe, all of it at this point. But we did have a surprisingly good jobs report. The ADP jobs report, as we saw on Wednesday, did this just flash me forward? I hate when it does that. Week's not over yet. It's not last week yet. ADP, we were expecting 150, we got 107. That was down. And so I think quite a few people, and then we had this expecting 214 and it was up to 224. 224 is not problematic. Not even a little bit. They're expecting productivity to drop, and it did, but not as much as expected. Manufacturing still pretty good, up a little bit, up a little bit. Construction spending up a little bit. Then we got this jobs report. And we were expecting it to go from 330 down to 185, and we went to 350. Smashed the expectations, higher than last month, and last month smashed the expectations. Unemployment was expected to tick up. It stayed at 3.7. Hourly wages expected to drop a tick from 4.4 to 0.3. Unexpectedly rose 0.2%. Very strong. Hourly wages year over year up 4.5%. Love it. Consumer sentiment came in up slightly as expected. I mean, that's fantastic. That is economically overwhelmingly strong. But then the question becomes, well, then is it a little too strong, right? And then we think about Jerome Powell, and his new dilemma, because it's, everybody would love to see the interest rates drop. You'll notice the S&P is up 1.25%. The Dow is up 0.58. NASDAQ almost 2. Where's the Russell? Down 0.3. Why? Because when we talk about adjusting to Fed expectations, especially when we mean adjusting down, like, oh, we're not going to get 2%. We're only going to get 1%. We're only going to get a couple, take a pause, a couple more. That's it. Well, what stocks would benefit most if we did get 2%? Russell. So as those expectations were getting built in, everyone's like, we love small caps. And then as we're like, you know what, it may not be quite as rosy as we thought. And the Fed is not going to be quite so as accommodative as earlier expected. And everybody's like, we don't love small caps quite so much. Because, yeah, when money's more expensive, small caps struggle the most. They would love to see interest rates come down and money get cheaper again. And when it does, we will see that. But right now, there's tempering of expectations. We saw a little bit of a surge in energy, but look at oil down almost 2.5%. So I don't think there's much to worry about there yet. If oil can stay down, I don't know. I mean, it seems like the inflation, there was one number, I believe it was the CPE, that kept coming down, and the CPI was unexpectedly a little bit higher. I think they're going to watch another report or two. What does that mean? So let's go take a quick peek. This is now, we got through the January, so now we're March. Now there's 7 reports. 7, 1, 2, 3, 4, 5, 6, 7, 7. 7 meetings and adjustments potentially remaining this year. The next one will be late in March, so towards the end of Q1. Essentially, we get 2 per quarter because of the frequency here. So Q1, we've been watching, and the expectations have been very much 1-to-1. And there was a little bit of like, hey, maybe it's 0.5% that they cut it. And even in the 1-to-1, more often than not, it was still favoring 55-45, favoring a 25 basis point cut. Now you'll notice it is 4-to-1 for what? For leaving it unchanged. Although it was interesting because I did see an article that said, is this the Fed's first chance to have a surprise in over a decade? Like I was saying earlier, right? That we haven't seen that. I think at a 20% probability, if they cut it, it would be a surprise. If they did cut it, it would be a hugely positive surprise. Oh, the market would rally for all of March and all of April. That would absolutely be the type of catalyst that would finish us up with this nice late winter, early spring run, and then gets us to that May, June period when we're like, yeah, okay, it's probably going to ease up a little here. So, okay. Yeah, more likely than not, leaving it alone sets up the possibility for a bullish surprise. When we go look at May is about 2-to-1 in favor of, we'll have 25 at that point. Very small chance that's a half. This makes more sense. This is what I've thought, a Q2. I think that's likely what's going to happen is Q2. And then at that point, it's not really a surprise, and it's more likely to be expected. So, all right, we have a good sense of what we're looking for there. Now, as far as what else we're looking for next week, everything, like we said, this week, economically, super strong. Super strong. Monday, nothing really coming out. Tuesday, we have some Fed speak, the regional leaders. We have the Cleveland Fed. We have the Minneapolis, and these are some of the more prominent. Mester is often talked about as the next successor to Jer Bear. Kashkari is another one that's around a while. I don't think that, I mean, maybe we're starting to look through the speeches of the sub chairs to get a sense of the consensus of what's coming next, but that's not really data. Like we'll process the consensus, verbiage from that, but I don't see that having much impact during market. Wednesday, nothing really. Deficit, no one cares about. Some Fed speak, nothing there. Thursday, we have jobs. Friday, we have a minor CPI seasonal revision and more Fed. What do we have next week? Nothing. We don't have anything. Which to me means Boston Fed speaking both days. Yeah, Susan Collins is busy. Let's see. Bowman. No, she's only one day. Barkin's going to speak Wednesday and Thursday. So there you go. Yeah. What it is to me means that whatever the momentum is pushing, especially if it carries through the weekend, what we're getting now, I'm expecting to continue next week. I don't see anything that is likely to disrupt it other than potentially some earnings. But we just had the biggest. We just had Apple. We just had Amazon. We just had Meta. So anyways, That's the market we're in now. Let's go take a quick peek at actual conditions in here. AMD, oh, it's looking strong. That's one that was on our list. That was on the list. That was turning anticipatory yesterday, confirmed this morning. Let me get my watch list available here. Okay, let's start with the market itself. Oh, that's so strong. Right? You can see that we had a big volume day yesterday or on Wednesday, but then it immediately turned. Now we're still sort of in that zone, though this might be enough for someone to think we're starting to break the other way. That also had volume. If not yesterday, look at today. Right? If not yesterday, look at today. We're going to have big volume. How do I know? Because average is 77 and we're at 72. And there's 30 minutes left. And typically speaking, let's go look at yesterday's last 30 minutes. So yesterday's last 30 minutes, which was here, the volume was almost 9 million in the last 30 minutes. 9 million. So, yeah, and the day before, it had 24 million. And here it had 8 million. So what do we have here? 8.5 million. So yeah, I would say 10 million today in the last half an hour. What is that going to do to our overall volume? That's going to take us to about 82 million. That is about that. Both of these days will count. 1 sell day, 2 buy days. That's the resilience and the strength that this market has. We scored a 6. We're not surprised that it's like the sellers are like, here we are. And the buyers are like, boom, boom, nope. And just like that, what are we doing? We're breaking new highs, right? We're accelerating. We already, let's just go through our recent scoring. We already back here recently scored that this was breaking out and looking for this to be an acceleration. This, I believe, is confirmation of that. Am I gonna give it another point? No, I've already given it. Maybe when it's done and it gets in a well-established higher high, I might give it an extra, and then we'll see what happens. But no, right? If you notice, we've already scored that. In fact, it was just this last week. So did we do well scoring that as a breakout? Clearly, this is saying yes. We had a good read on that breaking out, giving it that extra impact. Perfect. On point. Huzzah for us. What do we have going on here? I'm going to point out, I drew this line way back in here, and I said, let's see what happens on this pullback. And I actually missed it. It actually was even just a little bit stronger than that. But that seems to be. Now, what would that do for me? Let me, nope. Let me duplicate this and put this over here maybe. And say, okay, in the short term, that's my trend right now. What would I score that? At this point, I would say that's a 2. That looks nice. It's best we've seen sustainably for this period of time right here. So right now I'm at a 1.75. I'm definitely going to see that kick to a 2. Bob says maybe even a half a point higher. The argument could be made. That's higher low breaking into higher highs. I definitely think another 1/4 of a point, though. Okay, let's go on. What do we think about volume? We scored volume. Let's talk about it before we look at it this time. Volume, you'll notice I got a little bit, I questioned myself on the half a point drop, half a point climb, but it got this half a point, and then I actually went ahead and raised it even again. Okay, so I'm like half a point. I think buyers are showing enough strength to be in control. Let's see if that was right or not. So let's go down to the 1 month daily. You can see here, Is this 1 month daily? This volume is going to drop off right there. I'm going to have one day here, one day, the very, very, very last day. No, that's still going to be there. Although technically that's a positive day, negative day. So those wash themselves out. Then I come across and I have a buying day, I have a buying day, I have a selling day, I have a buying day, I have a buying day. Definitely at least a 0.5. I think an argument could be made for a 0.75, but at least a 0.5. So if nothing else, the increase to 0.5 was right. Major market's at a 0.75. Yeah, I don't see that getting better. And in fact, I still have some concern that if we see the NASDAQ or the Russell, continue to falter, we may see this drop back to a 0.5. Just kind of an organic, like, hey, if we don't have small caps participating and we do have the Dow, that is interpreted a certain way. And that certain way is not 0.75 or a 1. For us to be at a 0.75 or a 1, we need the NASDAQ in charge. We need the Russell participating in a leadership position. I just don't think we're going to have that. Sector rotation. So that one maybe could drop. So we were looking at like a 6.5, but that could. If that dropped, that would take us back to a 6.25. If it stays the same, we're still 6.5. I could go either way for me. Sector rotation is not going to drop. I think we've seen plenty of strength from technology, plenty of strength from communication services. We've seen plenty of strength from financials, industrials. The only one of the five that has eased off is is consumer discretionary. If we drop another leader, we'll drop down to a 0.5. If consumer discretionary starts to rally up and lead again, we'll go back to a 1. Otherwise, it'll stay at a 0.5 or a 0.75. So yeah, it definitely looks like we're going to increase. I'm looking at somewhere between a 6.25 and a 6.5. Some people could even see themselves probably at a 6.75. It's bullish. It looks bullish. It was resilient into the face of some earnings concerns, and it just sort of smashed its way through. Okay. Right? This is with the market adjusting to the most likely situation of the Fed not cutting until May. That adjustment's in place, and this is still what we're seeing. Keep that in mind. What's next? The VIX. Sorry. The VIX, and then we'll go in and look at some trades. The VIX is it's had some volatility to it. I know you're like it. Well, Scott, it is called the market volatility index. No, but what I mean by that is some whipsaw. It's had some whipsaw. It went up, it turned, and then it turned again, and then it turned again. And this would be confirmation of this as a lower high. I am closing below the body of the previous day. That is valid. So when I've talked about that signal, this is a de-escalation signal. That is supportive of a bullishness carrying it over into next week. And if it's going to do so, it's going to look something like that. Something like that. Something like that. Where, right, those de-escalatory periods, boom, 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 where it comes down, maybe even gets to a new low. Now, do I have enough to score this? I think I am going to give that 1/4 point for a lower high. I thought I might not do it, but I am. I think, in fact, no, I think I said I am going to give it 1/4 for the lower high. It gets another. So this is for a 0.25 here. Yeah. That's a 0.25 for the lower high. It won't get another one until it breaks down here. That would be another 0.25 added to it. And that's overall. Even though this would add to the score, if we're in this area down here, there's a good chance we're wrapping trades up. But at that point in time, I'm saying, yes, I'm wrapping up bullish trades, but I'm also saying that this market is fundamentally stronger than it was. So that's how I see it from a market posture standpoint. I believe I will end up between a 6.5 and a 6.25. Or excuse me, 6.5 and a 6.75. I think it's going to go up a half to possibly 0.75. Let me know your thoughts. If you think I'm right, wrong, if I'm onto something. Let's go through the watch list. Bob says inconcurrent. So what does that mean for mindset? I'm expecting it to improve, and there seems to be momentum with no disruptors. Look, if you booked some gains, great. I always consider booking gains before a weekend, but if you're carrying bullish trades, that makes a lot of sense. If you entered new bullish trades, if you started them this week and you're carrying them, makes a ton of sense. That's the mindset for carrying them. We talked about what we're looking forward to next week. There's very minimal friction for the market. Maybe a Fed sub chairman says something, regional president says something crazy. I don't think so. They tend to stay in line with messaging, with on brand. Okay, so let's get to the watch list. What's going on? Apple gap down on earnings, recovered all the way back basically to where we finished yesterday. Amazing. AIG. That's tough, but that could be it. That could be the turn. It may be a one-day consolidation, and you'd have to be now. That's anticipatory. That's price only. You don't have confirmation in the oscillator yet. AMD was anticipatory yesterday, confirmed early this morning. I would say still confirmed, but it's moved a lot already. Where would I put my stop if I entered late? Put my stop below this low here, right? So at 169, you're taking $6 of risk. Can I get 12 to 18 to the upside? Absolutely. Absolutely, right? 14 is at 190. I think 200 is easily in realm. That's 4 to 1. If you get risk stop down here with a target at 200, that's a 4 to 1 trade. And that is a parabolic moving stock. A lot of strength, a lot of momentum. Very strong right there. Amgen overextended. Amazon, we got to wait for whatever comes next after earnings, right? AXP. I mean, honestly, I thought AXP was going to ease up a little bit from here. I was looking for it to consolidate. It's just kind of smashing out of it. That's tough. Boeing is still in its, try to figure out a bottom stage. BK, that's a maybe right there. BK just had a new high. Sellers have had a couple of days. They haven't done much. That might be it. Look at the trend that this is on. It just keeps going. BK financials, I think, is a sector that there's going to be opportunities at early next week. We'll see. BLDR, that was back here. We had entries on some industrials back here. It's already moved. It's made a nice move. If you book some, if you keep some, that's one I like and trade frequently. BLK, that's a viable signal. I don't love the most recent trend as it's just kind of consolidated back to the 50, but it did hold the 50. There is definitely a tendency of institutions to bounce things off of 50-day moving averages. Okay. And that's in the financials. BX financials, it's very close. This one would still be early next week for me. Even though it's a nice, strong day today, from a candle perspective, that candle is still in this kind of flag range. I want one more day to say that it's broken that, then we can go. Now, if I wait for that, I'm not going to think about a stop down here. I'm probably going to have a stop somewhere in this range, and I would imagine it's under the Heiken Ashi low. I think BX is viable for next week, so let's keep an eye on that. City, same thing. In a flag pattern. Caterpillar, nothing yet. It's just kind of pushing higher. Industrials, showing their merit. Capital One, anticipatory, open for business. Waiting for this to turn, you probably have one more day. So if you're saying to yourself, this is the flag and you're drawing it tight, you're thinking that's breaking out of that flag. If you're drawing your flag a little more conservatively, taking the tops, you're like this and you're saying, yes, that's nice, but it's still in the flag. I'm waiting for one more day. That would have the same basic entry premise as BX, but it's also more confirmation that financials is where signals seem to be developing for early next week. The industrials were earlier this week, and we should still be in them. Financial or communication services, technology, those fired off today, yesterday. Oil, no, not yet. Costco was back here. Back here's where we talked about it. It paused and then kept on going. Carried through the weekend. Yeah. Anybody in this one? I know this is one we talked about earlier. CrowdStrike, tradable. That's tradable for me right there, right? This is popping out of that little consolidation period. Your stochastics is turning. And this is what I mean when I say there's a good chance we have that. You could say maybe you put your stop here and then move it up. Your stop's around 295. Carrying that through the weekend, and this thing's just getting started. Very much viable right there. Oof, I've got to go a little faster to get through this list. Bear with me. Let me erase this. Let me get back to candles. CSX overextended. DAL. That's viable. It popped, pulled back, held the 50, starting to turn. 50 days can have some significance. So that's worth consideration, but DHI, not as much. DIA, here's the Dow. Dow's continuing to push higher. Fastenal, that's one we looked at earlier. It was viable yesterday. Earlier in the day, the better. For me, anytime it crosses the previous day's high, body may be high for sure. So around 69, it's moving now. Strength in industrials. There's GE. I mean, it's kind of a conglomerate, but I think you could consider that industrial, and you can see that strength there. Gold kind of sideways. Google trying to recover from its earnings. Home Depot, remember I said I'm hesitating on that one because of its sector. And I think that worked out to be the right situation. IBM, very close. Very close. IBM sitting in the tech space. We have this nice flag looking pattern. We're looking for this thing to stabilize and pop out of it. Barely touched the gap at all. I love IBM. You can see we've traded IBM multiple times. Intel, nothing there. We'll keep watching it. Okay, so what do we say about IWM? My thought was we broke the consolidation. New high. We took out these new highs, pulling back. What do we want to do? We want a higher low, and we would love to hold the 50. Well, so far, that's what's happening. Even though today it's down a little bit, it's holding the 50. That to me is indicative of continued resilience. Yes, absolutely. Absolutely. JP Morgan, it's another one in that consolidation. There's some strength in financials. You better have something on your list and ready to go. Meta. Oh, good Lord, Meta. Look how strong that was. Look how strong. Amazing. Now, here's what I'll tell you. If you were to have done a straddle or a strangle, I don't care how much the volatility dropped, and you can see it did drop like 10%. I don't care. You would have crushed it on those calls. I mean, that's just, but how often do you actually get that? Right? Versus other things that aren't as big. There's been some movers for sure, but you'd be surprised where 5-6% gaps don't do enough. And it's like when you need 8%, 10%, and then you barely get it or you don't get it, it's way, I don't know. Anyways, I know we talked about that. We had a few people ask about that strategy. Let's keep going here. Microsoft. Microsoft looks like it's bouncing out of its flag, right? It looks like it is flagging like this and turning up out of it. The stochastics is giving a confirmation. Woo, it's volatile up in there though, right? But it looks like it's trying to move. Netflix is consolidating after earnings, had great earnings, smashed higher, pulling back, holding, just waiting for it to turn before we look to. Let's be sure. Let's be sure it doesn't just dip a little more and then turn, right? There's no reason to get antsy right now. NVIDIA is a magnificent beast. You would not really have seen this, but that would have had to have been your call to action, and then you're in it. But I'll tell you what, it moves fast. Picard, I would say viable. Anticipatory yesterday, confirmed today, confirmation coming here. There's going to be times where I put the alerts in the day before and I say this alert is confirmed if it crosses, and what I'm going to be using is the previous days, either the body or the high, or I might even use the body high as a zone where I say if it crosses through this zone and if it enters it, I'll leave it at your discretion how early in the zone you would use it. But this is what I want you to be thinking about, right? And then if that entry is good, where would the stop be? The stop would be somewhere probably down there. The other information is going to include target and possible time frame. That's the format we're looking at. And I've gotten a little bit of feedback from some of you that say that's on point. So okay, but viable. This is what we're looking for. This is a stock that is in industrials. That's a sector that we have acknowledged is in a leadership position. Just made a new high. It pulled back. And then what? Then we got the turn. The turn with the candle, breaking out of the current price consolidation, the indicator turn. That's what we're looking for triggers. Now, more aggressive traders or traders who see more bullishness may require less triggers. They may say, I only need one trigger. Some others may want more. That's where these are personal decisions that a trader makes on a trade-by-trade basis. That's why with the alerts, we want to give you more of that openness, that ability to see the broader perspective of the trade. QQQ, turning. Look at the strength here, right? This is another one where we're actually seeing this was our trend, and we seem to be watching a trend acceleration occur. That's one type of a trend. Here, the trend is accelerating, increasing the bullishness. Like I said, we may see our posture get to the highest point we've seen. And this is more confirmation. Is the NASDAQ, is technology in a leadership position? Absolutely. I don't think you can argue that, right? SMCI, just another beast, but at this point, you're kind of chasing a running freight train. We need to wait for that thing to slow down a little bit, figure out where that next consolidation is going to come. That's where we're looking for our next opportunity. Patience is a virtue. Here is the market here. I told you, I think we're going to get upwards around 85 million shares. It'll keep counting all the way past the hour. We're at about 82 million. It's looking strong today. UNP signal was back here with a lot of other industrials, maybe taking profits, maybe trying to push through. The VIX giving us that lower high. Nice confirmation. Nothing there. Walmart overextended. Real quick look at the sectors, and then we're going to wrap up. Bob just called it out. He says he thinks we're going to hit 7. That elusive, to get to a 7. My goodness, I just don't think there's been a 7 for. I'd have to look at my own personal records to see when that was. XBI, what is biotech? Biotech, which bleeds into pharmaceuticals in healthcare, less viable. Materials, less viable. Communication services, strength. That's 1. Energy, iffy. Financial, strength. That's 2. Industrial, strength. That's 3. Technology, strength. That's 4. That's broad. That's a broad-based market. Broad-based rally. That's why we see it strong. That's why we're looking for it to continue. You can see we're looking for this to bounce and to push. We don't see much for friction next week. Okay. Staples, a little bit of straight, a little bit of a pop. But for me, remember, this is a little more of a defensive. For me, the trend fundamentally stable, same trend. Nothing there right now. XLU, the utilities, there's nothing defensive about what's going on there. Whatever we thought might be defensive developing back in this area never materialized. Off the charts there. Now, here's what I'll tell you. Healthcare. Healthcare still has strength. Just stay away from biotech and pharmaceuticals, right? It's the other areas of healthcare that there still is strength. And that, again, adds to the breadth of the market. Whereas another concern, consumer discretionary. Oh, hold on a second. What's going on? Consumer discretionary, led by, obviously, Amazon breaking out. That's the first sign. We'd like to see it get up, pull back, higher low. Bam. We see that right there. And this thing puts us back to a full 1-point score on our sector rotation score. Love it. Great conditions. If you've been with us for a while, you know we've seen significantly worse conditions than this. This is the best we've seen. Everything about this. And it's supported economically and supported by what we're seeing by even with diminished expectations of the Fed. Real quickly before we hit the top of the hour, I may take just a minute or two of your time. Routines, you have 2 more days to get your hour of trading plan time in. 2 more days. Get me that hour. Defining routines. When? Right? When are you going? What's the window of time? How long? How long is that window going to last? My pre-market's only 15. During market, I have one that's 15 and one that's more like 45, like this. What are you going to do and in what order? That's for each of these, that's what you need. When are you going to do it? How long is it going to last? What are you going to do? And what's the priority? There's our closing bell. Sandy called me a slave driver, demanding my hour. I demand my hour. That's my pound of flesh. I want it. It's mine. I made a guarantee yesterday that if you give me an hour a week and you give me 3 iterations, and yes, I recognize that's 6 months, but in the broad scheme of trading, 6 months is a blink. A blink. But at the end of that 6 months, you will have the greatest trading plan you can possibly imagine. That's the promise. I promise that. So give me the routines. Then think about your weeklies. Yeah, if you don't want to get to the monthlies or quarterlies on this iteration, wait till the next pass. Great. Wait till the next pass. I can respect that. Thank you, Sandy. I appreciate you as well. Thanks, everybody. That's your task. So we will be meeting on Sunday, regular time. I will be making some internal adjustments to make sure that there is a smooth delivery, expecting an alert on Monday in one of our financial stocks that we identified today. It's good to see everybody. Have a great rest of your... Bob just asked any snowblower news. Well, the good news is it's been 55 degrees. All the snow's melted, and I haven't needed. But no, I haven't worked on it, so it's still my back and my shovel for the time being. But I have a project. It's good to see you all. Have a great rest of your day. Have a great weekend. I'll see you Sunday. As always, happy trading.